Ever found yourself Googling one night how to lose weight or what does the engine light on my car mean and instantly feeling overwhelmed? I've been in this position too often, and when it comes to buying a property, digesting the lending terminology can make the experience quite stressful. So today, let's break down what and how much of a deposit is needed when buying a property. Hi, I'm T from Loan Lounge, a business focused on compassionate and highly entrepreneurial financial services that empower you to reach your goals. Okay, so think of a home deposit as your initial contribution to purchasing a property. The bigger deposit, the less you may need to borrow from the lender. Although most lenders prefer a deposit between 10 and 20%, they sometimes consider 5% of the sale of the price too. However, you'll need to keep in mind all the additional costs that come with the overall transactions, like conveyancing costs, building and pest inspectors, and any other applicable fees. It all adds up. Let's assume these additional costs require you to put aside $3,000 towards them. And of course, if you're not exempt from stamp duty, then further funds are required. Steve, a hard-working first-home buyer, has offered $500,000 on a property in Victoria. Considering this is a first home and the property is within the threshold, he will be exempt from stamp duty in this scenario. And so the minimum deposit can range from 5 to 20% plus additional costs. On the other hand, we have Sarah, an ambitious investor who has also offered $500,000 for her property. But in comparison, she needs to contribute an additional $21,970 towards stamp duty. So how will the deposit lender weigh their ability to pay the loan? Lenders will consider your financial situation by observing whether you have at least 3 months of regular savings paid into your bank account. This shows the lender that you are capable of budgeting and managing your finances responsibly. It also indicates that you are a low-risk borrower, which is a priority for many lenders. If you don't have the savings in the traditional sense, there are also some non-traditional savings options that lenders will consider. These include things like term deposits, shares, and even an inheritance that's been all held in an account for at least 3 months. Plus, equity in an existing home or gifts of money can also be key contributors towards a home deposit. So all of this needs to be taken into consideration. Finally, if you can't save up for the required amount for an upfront deposit, one option to avoid paying lender's mortgage insurance, or LMI, is to get a family member to be a guarantor on your loan. Most people know you almost always need a deposit to buy a property, but few take the time to understand what their deposit is actually for. Beyond that, many often don't know what they're supposed to do with their deposit money when the time comes. Hopefully this video has cleared up some confusion around raising enough of your deposit for your property purchase. I'm T from the Loan Lounge. See you next time.